G'day folks, Jim here from Orchard Forex. It's Saturday the 12th of September. Well, the markets have just closed in what was a choppy sideways end to the week, as can be seen from the amount of blue on the trend table, indicating indecisive conditions as the market now turns its focus towards the upcoming Fed meeting on Wednesday afternoon in the States, early Thursday morning in Asia. And this is going to be a critical event and could spark some exaggerated volatility one way or another in the weeks ahead. So I won't spend any time on this really, apart from to point out that the S&P does still look heavy. Stocks still look currently as though there might be more downside than upside. The euro and sterling both look a little bit heavy as well. But that aside, there's an awful lot of blue, so we won't dwell on the trend table, and we'll go immediately and have a quick look at the charts. So we'll start with the dollar index. And as you can see, this has been marking time really over the last couple of weeks really. And it's been doing that more or less since the Jackson Hole event, at which the Fed chairman, Jay Powell, announced that the Fed wishes to push inflation above its long-held target of 2%, while at the same time keeping interest rates at record lows, in allowing the economy to run hot so that production capacity is unable to keep pace with demand and hopefully to boost economic growth. So this could be the prelude to some big moves this week, and this is going to be the exact opposite of past Fed policy, where previously they would quickly signal any possible rate hike if inflation looked like picking up. Although it has to be said they felt pretty miserable to do that or get anywhere even close to the 2% target for quite a few years now. Having said that, we did get the August CPI on Friday. That surprised to the upside and came in above the expectations of 1.2% annually, actually recording 1.3% reading. How they intend to create their desired level of inflation above 2% in the current environment, though, that's going to be anyone's guess, and we'll have to wait for Wednesday for any clarity. And if they do provide a clear plan, then we should probably expect stock markets to head higher, along with commodity prices, and also see a weaker US dollar. On the other hand, if they provide a muddled wait-and-see type outlook, I suspect the dollar will rise really quite sharply and stocks and commodities will come under considerable downside pressure. But we'll have to wait and see on that. And we also need to put into the mix the upcoming US election, which isn't so far away now. Brexit, China's relationship with just about everybody. Central bank meetings are also taking place this week at both the Bank of England and the BOJ. So it could be a pretty big week. But as we do look forward to the potential outcome, the daily dollar index charts do still point higher, although it has to be said they're just really recovering from having become oversold in what's really been sideways action. And we look forward to the weeklies. The weeklies are still heavy, but holding on above this critical support here, being the 74% rise of this rise here, and also the this long-term trend line, which if we go out to the monthlies, we can probably see that better. Right, here we have a monthly chart, so going back to 2011, holding on to major support here, and this yellow moving average line here, which that's the 100-month moving average. So we're sitting on some pretty big support. Unlikely to go through that ahead of the Fed announcement. But depending on what they say, we could see a break, or alternatively a sharp rally higher in the dollar itself. So we'll go and have a look at the individual currencies. Okay, so here we have a 4-hour chart of the euro, and as you can see, it's pretty much tracked sideways for quite a while now. This spike here, that was the Jackson Hole announcement, so really we've done nothing since then, and we're closed pretty much in line. So I suspect, although we're not going to do an awful lot ahead of Wednesday, we could potentially be in for some quite big moves once the Fed have made any decision. We'll have a look, go and have a look forward to the dailies. Now we're sitting on this uptrend support here, and a break of that could see us head to the downside, and with the immediate support below this this support here, coming in at the 23.6. That's 117.10 or so. And if we go back below there, we've got these lows here, pretty much as I said last week, 116 sort of 95. A break of which could then see quite a move to the downside, so 115, 30, 40. On the top side, the recent high has been this peak here, just above 120, and then we have to go out to the weeklies to look for previous highs. And some way back here, we've got this previous high that comes in around the 120 level there. But beyond there, so we've got a bit of a double top there, just around that 120. Beyond there, though, we go back to these FIBO levels. This one just below 121, which is 76.4% of that fall. And then we've got the 50% pivot of this fall here, which that comes in at 121. So that's going to be reasonable resistance. But if we were to see a break of that, then we're probably heading at a fair bit higher. It's too early days at this point in time to suggest that. And if we come back to the daily charts, they're actually pointing a little bit lower at the moment, although they may be pulling out of that. And as I say, it's really just been a consolidation as the charts unwind a previously overbought situation. So we wait and see on that. But for the time being, I think you can probably, until Wednesday, Thursday, probably look to trade 117.5 to 119, that 119, 10, 20 area that we saw towards the end of last week. Dollar yen, I won't go there at the moment. It had a 25-point range against the dollar on Friday. It's not doing anything. Sterling, on the other hand, the big mover of the week. So as we can see, sterling has fallen heavily for the past fortnight. It's about 700 points lower than it was on the 1st of September. And it's pretty much entirely Brexit related. The talks are not going well. The Tories seem to be in a complete muddle as to how to manage Brexit along with the pandemic. So the hourly charts are correcting from having become oversold. But if we go out and look at the daily charts, the indicators do still point lower. Having said that, we are running into support here at around this 127.30, 127.10 area, where the 200 and the 100-day moving averages are in alignment. So that's going to provide some decent support. We really need to see further clarity on what's going to happen with Brexit, though. The weekly charts are showing that we have actually broken below the 200-week moving average, and we're sitting right on the top of the 100 and the 55-week moving averages, with the weeklies also beginning to point a bit lower as well. Not a great deal of momentum, and maybe we do just chop around until the Fed. But things are not looking real good for cable. The monthlies are pretty flat, but if we continue as we at the current levels, this would be a bearish monthly reversal, suggesting further downside levels for sterling in the months ahead. But we're only in the middle of the month at the moment, so that should be put on hold at the moment, but keep an eye on it. It's worth watching. The Aussie is going to be one of the major movers, I think, following the Fed decision, depending on the outlook for growth. We've been in this very slow, choppy uptrend for a while now, and as I pointed out last week, we've got some bearish divergence on the dailies. So I've got no real view. I'm pretty neutral on the Aussie at the moment. The weeklies are pointing higher. But they're becoming a little bit overbought. We finished pretty much on the 200 week moving average, so I think that could well act as a bit of a magnet in the coming days. We have got the RBA minutes coming up on Tuesday, I think, but it'll be the Fed really that provides any real direction, and depending on what they say, that will see the Aussie take its next leg one way or the other. And I would imagine that for the time being, this sort of 71.30, which kind of provided a base last week, and this or above the recent high, sort of 70, where was that, 74.20, I think it was. We could head up towards 75 depending on what the Fed say, but at the moment I think it's all on hold. The 4-hour charts, as I say, they're pretty neutral, so I wouldn't be getting too involved early in the week, and the same really applies to the Kiwi, although I won't go there today, just in order to not to take up too much time with this video. But we will go and have a look at the stock markets. So here we have a 4-hour chart of the S&P, which has it had a pretty choppy few days towards the end of the week, but it finished not too far above its lows, and possibly heading back towards this FIBO support seen here. And I think I pointed this out last week, around this sort of 32.45 level. We haven't been there yet, but I still think there's probably a good chance that we could head that way. The daily chart indicators are pointing lower, as you can see, so I prefer to be short rather than long. And probably more interesting as well are the weeklies, which have become pretty overbought and I look as though they're topping out. We've also got we've got higher highs here, lower highs on the RSIs, so I prefer to be short than long. And as I say, that 3200 level is 3240. A break of that, let me go back here, that 3240, a break of which comes into these lows here, that's sort of 31 3/4. These lows here, just above 3100, and the 38.2% level is at 3050 or so. I'd be selling into rallies up to, well, if we saw this 3480 level again, I'd probably sell up there. Certainly keep a stop loss above the high in case the Fed are fairly proactive in what they say, but which would send stocks higher. But for the time being, I think the downside is more relevant. The actual thing that's been moving all this really, the big tech stocks, the Nasdaq, the FANG stocks, Tesla, of course, has been highly volatile, having 20% swings on a daily basis. So we've come back and we're sitting on this support here, having broken through its own 23.6% support level. And if we do break this level, then I think we could head quite a long way lower, possibly back down here to sort of 10,200, quite a long way away at this stage, so not worth getting excited for yet. This is a 4-hour chart, more interesting. The dailies are pointing sharply lower, as you can see, and the weeklies are hugely overbought and seem to be topping out, while at the same time, like the S&P, showing some bearish divergence. So, as I say, I'd rather be short than long. If you're looking for levels to go short, I guess you probably sort of at the top end of this consolidation, 11,600 or so, with a stop loss. You'd need to leave 250 point stop loss, but that's the way I'd be looking at it for the time being. Looking at the commodities here, gold is not doing an awful lot, but could be a big mover on the Fed announcement. It's really consolidating in this ever decreasing range. The indicators are flat, the 4 hours. The dailies have been coming down at quite a rate, but really that's allowed the charts to unwind their previously overbought situation. And the weeklies actually look quite toppish. So if anything, I think there's possibly more downside than upside at the moment, but I can't get too excited one way or another about gold, and the same really applies to silver. While lastly, we'll go and have a look at oil, and I was reasonably bullish on oil up here, thinking it would eventually break above this red support that I've been pointing out for a couple of months now. It's really failed to do so, and after tracking sideways for so long, it finally has come lower in line with the stock markets and the concerns about future economic growth. The 4-hour charts, actually we'll go and look at the dailies, they'll probably provide more clarity. So we've failed up here, come back down, broken down below the 200 and the 200 moving average, and we're sitting on the 100 moving average. Now if we go through this neckline support here, then I think oil could see quite a move to the downside, and that support is coming around 34 3/4. If we were to break it, we go potential back down to these lows here, sort of 31, and possibly back down even below 30. At this stage, I wouldn't get too excited about that. A lot depends on what the Fed do come up with, because if they do provide some clarity with regard to inflation, oil might like that and could quickly see another bounce to the top side. Having said that, the dailies don't look all that special. The weeklies, which had been moving higher, have now flattened out. So maybe we're in for some choppy sideways stuff. I'm not really sure on oil at the moment, but I would be monitoring a break of this neckline myself. So that's about it. We'll just have a quick look at the calendar. Okay, here we have the calendar for the coming week. Monday's pretty quiet, apart from the fact that there will be a UK parliamentary vote on Brexit on Monday. Tuesday, if we move forward, the initial main interest will lie in the RBA minutes and the Chinese data headed by the retail sales for August. Then later on, we've got UK unemployment. We've got the ZEW coming out, and but that's about it for Tuesday. Wednesday, of course, is going to be the big day. We've got UK inflation to start off with, and then we get the US data. We've got the retail sales coming out ahead of the Fed, and then we do get the Fed itself a couple of hours later, and that will be the focus really for the entire week. Beyond that, we've got New Zealand Q2 GDP, which will affect the Kiwi a little bit, as well as the Australian unemployment, which comes out a couple of hours later. We then got central bank meetings from both the BOJ and later on the Bank of England, along with the EU August inflation numbers. And then we head into a fairly quiet end to the week. Not an awful lot going on Friday at all. So it'll really be Wednesday, Thursday where all the action lies. So until then, I think it's probably fairly range bound, but after that, it's probably going to be best to keep your stop losses pretty tight, because I think we're going to see some fairly wild swings. So until well, I'll put out a video midweek after the Fed announcement, see how we go, and until then, good luck with your trading. Cheers.